Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank using the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarah Ibrahim. I'm interviewing today a special guest. We're going to talk about capital gains taxes and how to mitigate them or even eliminate them in some situations. Our special guest today is Brett Swarts. He is an entrepreneur, commercial real estate investor, podcaster, capital gains tax deferral expert, deferred sales trust educator, trustee, and California multifamily broker. He is the founder of the Capital Gains Tax Solutions, founder of Commercial Realty Apartment Advisors, and host of the Capital Gains Tax Solutions podcast. Each year, he equips hundreds of business professionals with deferred sales trust tools to help their high net worth clients solve capital gains tax deferral limitations. Brett, welcome to the show.
Sorry, thanks for having me on the show. So excited to be here.
Yeah, thank you. I love talking. Actually, I love talking about taxes. I think it's a big part of entrepreneurship and building wealth over time. It kind of defeats the purpose just to make a lot of money and then pay a lot of money in taxes. It's kind of like, what's the point of making that money? And I also love talking about real estate too, and kind of the money behind real estate and growing that. So I think you're a perfect guest for our show. And before we jump into all the technical parts of taxes and capital gains, tell us a little bit more about your background and how you got into this specific niche.
Absolutely. So I grew up in the real estate business with my father and my mom, owning rentals, developing properties, mostly in the Bay Area. I call it the MC Hammer days. My brother and I would go on the Bobcat or hammer some nails and put up some drywall, and we learned and fell in love with real estate. And that continued into college, where I took an internship at a place called Marcus and Millichap, where I started to learn about how to invest, how to broker, how to buy, how to sell investment real estate, mainly multifamily properties in Sacramento, which is where I rely right now. And during that journey, it wasn't always easy. I was brand new in the business in 2006. Things were going well for a period of time, and then the market fell apart. And like most, let's say, real estate entrepreneurs or broker wannabes, during that time, things got really tough. And so I went from making a little bit of money to like nothing overnight. So I had to change and adapt. And my wife and I had a small baby at home. And in a lot of ways, I felt like a failure because it was tough, because it was 100% sink or swim. You either make it in the business or you lose. And while I was going through this financial struggle, so were my clients. They were going through a financial struggle as it pertains to having overpaid via the 1031 exchange, feeling trapped by capital gains tax, and some of them losing half or all of their wealth over the next few years during the economic crash. And so by day, I would work nights and weekends at a restaurant to keep the lights on. We moved with my brother into a small condo, and by day or by night, and then by day, I would cold call and negotiate with banks, negotiate with clients, help them keep their properties. And during that time, we learned about something called a deferred sales trust, which we can talk about here in a minute. But essentially, that changed everything and became the Netflix way of doing things versus Blockbuster. Business has grown, and now I just teach and train commercial real estate agents, insurance professionals, financial advisors, commercial real estate syndicators, CPAs on how to use this so they can help their clients escape feeling trapped by capital gains tax.
Awesome. I love the hustle. That's awesome. Yeah, you have to,
Thanks.
do what you got to do to keep, especially in 2008, 2009,
Mhm.
when I think most of the country was in that similar situation, especially people who were invested in volatile areas. Now, so the listeners know, like, what, for example, what is a deferred sales trust in basic terms?
Yeah, it's an installment sale. So the best way to think about it is if you had a piece of property that you were selling and you owned it free and clear,
Mhm.
you can become the bank. You can become the bank, and you can lend your equity to the buyer in exchange for them to pay you back over time. And so we have clients that have done that for many years. It goes back to 1920s. It's known in the tax code as IRC 453. So instead of doing a 1031 exchange, you can lend the funds to the buyer. The buyer puts a down payment typically, but you only pay tax on what you receive and when you receive it. It's kind of like an IRA, kind of like a 401k in some ways, right? The government's no stranger to tax deferral. They give these incentives for us to transact and do business in the order to try to spur economic growth. And so the deferred sales trust is just a specialized form of that, where we have a third party unrelated trustee, and that's what we it's our role here at Capital
Mhm.
Gains Tax Solutions. We're an exclusive trustee for the deferred sales trust, and we actually end up buying the asset from the seller right before we sell it to the ultimate buyer. So there's three parties, and we do it in that order. And what happens is the buyer ends up buying it from Capital Gains Tax Solutions or the new trust that's been formed, and then the seller gets a promissory note from the new trust that's formed, and they're in a deferral state. And this is where the kind of, I guess, say the magic or the flexibility, the transformation happens. They can now invest at their own timing back into real estate. Back to that 2008 crash, one of the things that we really learned during that time as we studied what happened was too many people had too much debt, not enough liquidity, not enough diversification, and they knew they were overpaying in '04, '05, '06, '07. But they felt like they had no option except for the 1031 blockbuster way of doing things. And that's when you learn about the deferred sales trust. You can sell high, pay off your debt, get tax deferral, and then buy back all tax deferred. And that's really the magic. Sell high, buy low, not sell high, buy higher 180 days later, but also diversify, buy stuff like insurance, put it into stocks, bonds, and mutual funds, put it into passive or active real estate deals, do some ground up development. We have a client who sold a $2.6 million business in Alabama, and he's building 70 multifamily units tax deferred in partnership with the trust. So that's kind of a simple answer, and it's kind of a long answer, but that's what the deferred sales trust enables you to do and what it is.
So if I own, for example, like a investment property, a real estate investment property that was like the market value on it was $500,000. Let's say I bought it for 400,000. So my profit essentially is 100,000. I go through you guys. You guys would buy it from me and then sell it to the seller, and I would get like monthly payments rather than being taxed on that $100,000 gain. I would get taxed on a smaller amount throughout time. Is that correct?
You got it. It's delaying the tax, right? Another way to think of it is like a delayed tax trust is another way to think about it, right? It's a deferred sales trust. And we're not tax avoiding, so we're just delaying it. Little nuance there, though. Our minimum is $1 million net proceeds, $1 million gain, right? So we want to make sure there's enough pain. In that scenario, we would say, you're going to have about $30,000 of tax on a $100,000 gain. Just pay your tax. It's not going to be worth the fees. But if you had $1 million gain, $1 million net proceeds, then your tax liabilities can be somewhere between $250,000 and $400,000, depending on the state you live in, and the depreciation recapture. Then that's a winner, right? Because the government says you owe us the money, but we'll charge you 0% if you follow these rules, and you can go invest it and live off the income and pay ordinary income tax on that. And if you dip into principal, you pay capital gains tax. But that's exactly the thing. We're going to like time value of money.
Yes.
Grow these assets in the rule of 72, which states if we can earn 10% or 7% over 10 years, we can double the amount within 10 years. And so most of our clients will just live off the interest payments, and they'll slowly pay tax along the way. You can also move out of state and establish residency in a new state and pay a little bit lower income tax there. You can also move funds outside your taxable estate. You can also get a new depreciation schedule to offset some of these taxes as well. There's a number of ways to do it, but part of what we do is we want to try to form a dream team to help you navigate each step of the way, because this is complex and this is a big deal for people, and they're hearing about it usually for the first time because their CPA didn't know about it, and they're going, oh my gosh, this is the biggest deal I have, and I'm doing it's my retirement, it's my legacy, it's finances, it's tax, it's IRS stuff. We want to make sure we do it right. So it's really about building the team, and the team is consisted of a tax attorney who's part of my business partners, a financial advisor who's my business partner, and myself as the trustee. And as we navigate your particular circumstance and fact patterns, we try to design this trust to work in your favor, if that makes sense.
Yeah, absolutely makes sense. And you're right. Like a lot of people, for example, and I see this too, working with like the infinite banking side and working with whole life insurance, a lot of people just assume that their CPAs know everything about taxes. And that's not true. There are niches even within taxes, like cost segregation and depreciation and a different elements. So it's important to work with somebody, not just a tax professional, but like a specific niche within the tax codes and tax parts. And, as you were talking about like moving to different states, I just kept thinking of California. So is that something that, like, you're in California, right?
I'm in California. I like to say we're on the front line of like heavy tax. Us in New York, right? We're like probably the two leading places for high tax. And so, yes, I'm a native from California. I love California in a lot of ways, but the tax and the business policies can be kind of a burden for a lot of our entrepreneur business and real estate owners here in the state. So.
Yeah, definitely. I talked to a lot of clients in California. That's usually the biggest topic we're talking about is the state, on top of the federal income taxes, also the state income taxes, and also the way that California, collects their state taxes. I've heard you were up there with New York, and Illinois is actually catching up too. So we're not we're not too far behind. This is the Chicagoland area.
Yes, yes,
Um,
sir.
yeah. So I want to kind of go back to 1031. So what exactly is a 1031 exchange?
So 1031 is a part of the IRS tax code called IRC 1031. There's also tax codes called IRC 401k, IRC 453, which is the deferred sales trust. So these are all legal tax codes or loopholes that allow you and allow us as U.S. citizens to defer or have some kind of tax incentive, okay? So with the 1031 exchange in particular, it pertains to investment real estate. So if you own a rental house property, if you own a multifamily property, you can sell that and essentially trade that for another property within a specific period of time, typically 45 days to identify, or always 45 days to identify, 180 days to close unless there's some kind of natural disaster or something happens and there's an extension there. But now you have to also follow some rules. You have to buy something of equal or greater value, which often means equal or greater debt. And we call it the shotgun wedding, right? This is why it's blockbuster, because you're having to get engaged in 45 days and married within 180. And sometimes that doesn't make for the best, connection there. It's better to be able to take your time and sell high and buy low, not sell high and buy higher 180 days later. And so it's just a way to defer tax, but it only applies to, again, investment real estate. It doesn't apply to high-end primary homes. It doesn't apply to cryptocurrency. We closed an $8.3 million deal in Palo Alto for a luxury primary homeowner who was moving to Nevada. We just closed a $5 million Bitcoin case for a former Google employee who she was selling her Bitcoin to fund a new business venture she's going to go into. And so the 1031 does not work for anything except for investment real estate. Whereas the deferred sales trust, this is why it's like Netflix. It works for any highly appreciated asset, public or private stock, cryptocurrency, primary homes, investment real estate, limited partnerships, LLCs, S corps, C corps, business sales. And so that's the quick little difference too between the two.
That makes sense. Okay, so like for your primary home won't count with 1031. If you bought it, for example, for 900,000 and you sold it for $1 million, you can't do a 1031 on your primary home.
Right. They have what's called a 121 exclusion, which means if you live there 2 of the last 5 years, you get 250 if you're single as an exemption and 500 if you're married. Right. And so again, we wouldn't be a good fit for that either. We'd have to have a big enough gain and liability above and beyond the 121 exclusion, which is one of the best tax incentives the government gives us, right? When we live in our primary homes. My wife and I did that. We bought our first house for $135,000 in 2011. We sold it 2 years later, almost exactly, for $250,000, and we got all that tax free because we were married. We had that 500 exclusion. So yeah, that has one of the more incentivized ones if it's your primary and you've lived there 2 of the last 5 years.
Yeah, I actually had a guest on one of my previous episodes, and he was saying, he's like, if you look at the IRS codes, it's almost entirely written to get married, have kids, invest in real estate, and own a business. And most
you got it right, because it is what creates the jobs.
Yeah.
And without jobs and without housing and without solid family structures, that is the nation, right? That is the strength and the foundation of the nation. Of course, its values and its leadership, right? But those other things is exactly right. The government's in the business of incentivizing what it wants you to do. And that's part of why we're such a great nation, because they've done those things. Now the challenge becomes when they get too far on the other side and they run out of money because they're spending too much and they're having to disincentivize people for these other things. And now it's just like, that's part of why we have all this debt crisis and a lot of things are going on because of so many things. But in particular, if we can make it easier on businesses and on entrepreneurs and on building houses, right, and getting housing and good school systems, then it creates more opportunity for everybody to thrive.
Definitely, I agree. Let's talk about your company actually on a day-to-day basis. So Capital Gains Tax Solutions, what is like a day in working in your company?
Sure. Yeah. So we're educating, producing content. We are one-on-one consultations with individuals and business professionals. And we're, as a team, we're all fitting into what's called the 4Ds: design, delegate, decide, and do, right? And as the founder and CEO of Capital Gains Tax Solutions, I'm really focused on designing and delegating, right? And not so much on the deciding and doing. I'm trying to empower our team members. And then I'm trying to spend as much time and focus on where I can add the most amount of value, which is to our new potential deferred sales trust clients, strategizing their sales, working with their business professionals, helping them understand the deferred sales trust. We also do a mastermind educational Friday every Friday at 10 a.m. Totally free. You can go to capitalgainstaxsolutions.com and sign up. It's all things deferred sales trust, real estate investing, and cryptocurrency, and how we can connect the world. Also financial advising, connect the world to this amazing strategy and make it really simple. It's like an open classroom. So yeah, that's kind of the day in the life of Capital Gains Tax Solutions. And then we have our video editor, we have our podcast editor, we have our folks who are posting on the blog, doing the website. We're researching different investments as well, and reaching out and connecting with more people.
And do you help in all 50 states?
We do. We're all 50 states. Yes, we're a national firm. And
Okay.
also it's foreign too. So
Okay.
if you're in Canada or Europe or wherever, Asia, and you have capital gains tax on something that you're selling that's subject to U.S. capital gains tax, then we can help you too. In fact, it helps you even more in a lot of ways because you don't have what's called some of the exemptions that a lot of U.S. citizens have. So it's even more powerful for you to connect with us on that.
Okay, that makes sense. So if you, for example, are in Europe, you have some investments in the States, and then you have the capital gains tax exposure. You guys can also help with that. Now, are there different types of capital gains? Is there like short-term, long-term?
Yep.
Can you talk
Short term
through
is a
that?
year or less, right? And it's
Uh-huh.
typically taxed as ordinary income tax. And then long term is a year or more. So if you bought and you're trading cryptocurrency on a really less than 12 months, guess what? It's going to be short term.
Mhm.
If you've held it for more than 12 months, it's categorized as long term. Now the deferred sales trust, we have 1.0 and 2.0. 2.0 can work for short term and it has no limit. So we have a solution for that. In fact, we're working with a gentleman right now. This is pretty cool. I've been mentoring him for a few years, and he bought some what's called NFTs. It's a fancy thing for cryptocurrency, and he bought it for 14,000. And within 30 days, it went to as high as $1 million.
Wow.
Okay, and so we're looking at the DST 2.0 because it can also solve short-term capital gains tax exposure.
Okay, that makes sense. Okay. Now I was reading through your bio and like website and stuff, and I see also optimal timing. What is that?
So we define optimal timing as when it makes sense for you, right? Our parents taught us to sell high and buy low, not sell high and buy higher 180 days later. And the best story for this was for a gentleman. My business partner closed the deal, and this is what kind of sealed it for me to move basically all of my effort in my career over to Capital Gains Tax Solutions and launch the company about 5 years ago. And that a gentleman was worth he had a property worth $20 million in Minnesota, and in 2006 he saw the writing on the wall. And I call this the Monday morning quarterback, right? When you watch that, if we could watch the tape beforehand, we could make the perfect pass. Well, he kind of saw what was happening. 2008 was approaching. He didn't know it'd be hit as hard, but basically he had done 1031 exchanges his entire career, and this guy's worth a couple $100 million. And he's looking around for a property. He's going, this doesn't make any sense. The fundamentals don't make sense. I'm either going to A, pay the tax, B, I'm not going to do a 1031, but so really it's C, a deferred sales trust. So for the first time, he used the deferred sales trust. He said, I'll try this Netflix thing out, see if it works out. Now, this guy hates the stock market, by the way, but he put it into some conservative securities and just kind of had it sit there, earning some interest, but not subject to a lot of the losses. And this is why it's the Monday morning quarterback, right? He sold high, and 5 years later, the bank calls him up and says, hey, do you want to buy low? He's like, what do you mean? He goes, well, we just foreclosed on that property from that, that overpaid 1031 crazy buyer out of California. Remember he bought it? Like, yeah. Well, we just foreclosed on him, and we just thought you might want to buy it back. He goes, well, maybe what's the price? And they go, well, about 60 cents on the dollar.
Wow.
And he goes, that sounds like a pretty good deal. So he had the trust reallocate its investments to a brand new LLC, and he purchased it at 60 cents on the dollar. So he sold high, he bought low, all tax deferred. Okay. And this is the part where like all the alarms go off, and every single commercial real estate owner or broker who's listening to this, you're like, you can't do that. You can't do that. Like, yeah, you can't do that with a 1031 because you have that 180-day window. But with the deferred sales trust, we have what's called optimal timing. You can sell high and buy low whenever you want, right? You also have no equal or greater value thing. You have no debt replacement requirement, right? In other words, he can get his powder dry and he can wait for the intrinsic value of the real estate to make sense. So one of our values here is not to not let the tax tail wag the investment dog. And when you have the deferred sales trust, you have the opportunity to purchase at optimal timing.
I love that. That's perfect. That makes a lot of sense. Yeah. Very clear example. I love that. Now so I'm also interested, something I like to talk to like entrepreneurs about, like yourself, what are some things you do on a day-to-day basis that like keep you focused, keep you driven, and keep the company like moving in an organized way?
Yeah, it starts when the leader gets better, everything gets better, right? So it's
Yeah.
got to start with my commitment and dedication to growing all of the gifts and talents I've been given, right? And maximizing the potential of those gifts, and then going and making an impact for others. My family first, my wife
Hmm.
first, my kids, then my team members, and then my clients in that order.
Hmm.
And as I'm doing that, it also helps me to help them maximize their potential, which helps us to all really grow as a company. And so it starts with habits, right? Our habits really are the foundation of our character and our
Hmm.
discipline, right? And so it's daily meditation, reading the Bible every day. It's
Hmm.
working out 5 days a week. It's eating the right foods. It's the right amount of water that I'm drinking, right? Literally breaking it all down: my health, my finances, my faith, my fitness, my family, my personal development and leadership. It's being careful what I allow into my mind and into my heart, right? Making sure that I'm around and surrounded by those who are moving forward and are very, very focused on making a difference in this world. So I try to do that, right? And so the more I can be disciplined on that, the more that
Hmm.
helps me to grow and be the leader I need to be.
That's awesome. And what books have you read or are reading right now that you recommend or have had like a big influence in your life?
Yeah, so there's a cool one called The Seasons of Life that you might not have heard of before. The guy's name is Jim Rohn, Rohn. He's amazing, right? So he's passed away, but every one of his books. But what's really great about that is it breaks down life and all of these things we're talking about into 4 seasons, right? The spring, summer, fall, and winter. And it's a pretty short read, but it's one of those books it's so rich and you can read it over and over and over again. It to help to get perspective and be reflecting and set goals and perseverance. And so that's a big one. It's called The Seasons of Life. Of course, Rich Dad, Poor Dad. If you haven't
Yeah.
read that, you got to read it. You got to reread it. You got to listen to it again. And another good one I really enjoyed a lot is Never Split the Difference. This is one
Yeah.
of the newer ones and last couple of years with Chris Voss. It
Hmm.
just teaches you how to communicate and think. And actually, I would want to throw one more. It's called Expert Secrets by a gentleman named Russell Brunson. And
Hmm.
Russell, if you're ever listening to this, I'd love to meet you someday. He's amazing at what he does. I thought I knew how to like sell and consult and communicate. And then I read Russell's book and I'm like, oh, Russell, like, well, you just taught me what I wish I would have known, 10 or 15 years ago. And so Expert Secrets is an amazing, amazing book.
Love it. Awesome. Yeah, I one of my the favorite books that you mentioned is Chris Voss's book, Never Split the Difference. Yeah, I love how he completely takes a different look on negotiation. He looks at it as like people think like negotiating is like fighting with people or like bargaining, whereas negotiating is really discovery and problem solving and getting to know what the other person truly wants and like connecting your objectives together and like leading the way for both of you to have a win-win situation for both of you.
Absolutely.
Yeah. Brett, how can the listeners reach out to you and learn more about you?
Yeah, so it depends if you are where you're at. I have a couple
Uh-huh.
places to connect with me. So you can go to
Okay.
capitalgainstaxsolutions.com. That's kind of the mothership for all things,
Uh-huh.
especially if you're selling cryptocurrency or a business, real estate. Get with us early because it's very important that we set this
Hmm.
up prior to close. So that's capitalgainstaxsolutions.com. You can also find that on YouTube, iTunes, Spotify, all the major
Hmm.
outlets and social media. If you're a professional looking to level up your game to attract and unlock capital for your clients, and friends and family as a profession,
Hmm.
then you can go to experttaxsecrets.com. Thank you, Russell, for Expert Secrets. I added the tax there. You see that? Experttaxsecrets.com. That website can give you more information on our coaching program and everything else that we do. So those would be the two main areas.
Awesome. God, I'll put those in the show notes. Brett, thank you so much for being on our show. I enjoyed our conversation and I'm looking forward to bringing you back on the show.
Thanks for having me. My pleasure.